So then I had this crazy idea and I was like, well, wait a minute. What if we actually didn't have to do the stuff that we're currently doing right now? Like, what if we didn't have to sign a lease, have a deposit, or even pay for furnishings? What would that look like? And then, because we started asking the question, we started getting different answers. And we're like, well, if we didn't have to put our own money into the deals anymore, well, then we could grow exponentially because we wouldn't have to use our own resources.
And the scalability point of it, like our first year, I believe we generated about 285,000 the first year that we started. Second year, I believe we went to 2.5, and now coming into the fourth year of doing this, we're about to cross over 5.5 million.
5.5 million in annual revenues.
Correct. In annual revenues of how we've scaled. And I just want to show the scalability side of it, because a lot of people are saying, can I really do this? Can I really, scale this as a true business? To have that short of a time frame, we have students creating six-figure businesses in under 6 months. Like that's the whole reason they're coming to our coaching, because it's taken us 4 years. It's taking a lot of our students even 6 months to a year to create these businesses from scratch, because they have obviously the shortcuts, they know the pitfalls, the systems, the process behind it, so they're able to go quicker.
So often we get questions about, how do I get involved in the STR market? I don't have a ton of cash. I don't have a lot of credit. I want to get involved in it. They see your videos on here with the BNB Bootcamp. What does it start? What does it cost to get the BNB, kind of enterprise up? What does that look like from a capital investment standpoint?
So the biggest key, I think, that people need to be aware of is that you actually don't need to own property in order to get into the short-term rental space. You actually don't. And because we know that for a fact, because that's actually how we started our business, right? So, going back almost 4 years ago now, as soon as we learned how to get into the industry without having to use our own capital, that was a game changer for us. So the way we started was with a technique called rental arbitrage. It's probably very familiar to most people at this point, but just to reiterate what we're talking about, rather than buying a property and paying a mortgage to a bank, we actually rented other people's properties as if we were long-term tenants, and then simply re-rented the nights at a higher price than what it cost us to hold that property on a monthly basis. Now, as far as startup costs, the answer, of course, is it's obviously going to depend on a few different factors. So it's going to depend on location, what kind of property you're getting started with. But just to give some example and some context, we started, I think our first property was a 1-bed, 1-bath. We hustled all around town. We found pre-owned furnishings. I think we spent around $4,000 on our very first unit. And within the first 2 years, that gross, actually netted us around $15,000 in profit. Okay. Mm-hmm. Now, at the scale we're at now, we have this systemized where we'll actually have investors pick up the cost of furnishing. So we actually don't even use our own capital to get into arbitrage deals at this point. So basically how that works is we'll sign a lease with a property owner. An investor will pay for the furnishings. So we have a deal with a homeowner where we'll pay a lease to them. And then after we pay all costs of operations, we'll split 50-50 with an investor.
So really, guys, we're getting into deals with zero money in. It's a win-win for everyone. It's a win for the landlord because they're getting their rent. Places are taken care of, professionally cleaned, maintained. The investor, they're parking their cash into these deals where they're getting a 50% return off of our net profits. And then we're managing the property. And that's where we're literally getting into the deal with zero money down. That's how we're doing it now with our arbitrage deals. So that's one of the models that we are, coaching and training within the BNB Bootcamp training. Also, we've talked about partnerships before. Essentially, you're managing properties and just taking a cut of the profits coming out of there.
Yeah, and what's unique with partnerships, just to kind of segue a bit, you can set these deals up where you can literally have zero out-of-pocket expense on yourself. So the excuse of saying like, well, I'd love to get into this, but I don't have any money or I don't have a good credit or anything, that kind of doesn't really become valid anymore, because as soon as you understand how to control other people's properties, but not even just control them, how to get into them without even having to use any of your own resources, that is the game-changing moment. So
essentially, when we're looking at there, let's say there's a house that you can manage, the homeowner, understands you're going to be managing it as a short-term rental. It's their responsibility for all expenses. It's their responsibility to furnish the property. Of course, we help that whole process. And then really from there, we just manage it and take a cut for the services. And the majority of the cut would go to the homeowner, right? So they're literally having a hands-off approach, being in the short-term rental space, and we are just taking a cut for our management fee.
Yeah, and I love that approach, guys. And let's talk about the scalability of this business. So obviously people that are watching us here on the channel, a lot of them have W-2s. They want the kind of quote unquote side hustle. Matthew is calling it the side empire now, which I love that connotation, much better than side hustle, if you will. But so in a part-time capacity, people can do this. Talk about scalability as far as the arbitrage versus the partnership model. Obviously, one's going to have literally no out-of-pocket expense. The other one, you are on the hook for lease, you are on the hook for furniture. So from a scalability standpoint, can you kind of speak to that, for people that are maybe thinking about, doing this full time or, picking up 5 or 10 houses in that side empire household?
Yeah, and I like that he calls it a side empire, a side hustle.
That's new. Thank you, Matthew. You can go ahead and trademark that.
Yeah. Side hustles, like there's work involved in this, guys, but I like side empire because you can automate, scale it, without that hustle part of it, right? So I'm really liking that term.
Yeah. So we can speak pretty confidently about this because I remember reflecting back to when we first got started. We started with just one property. At that time, we had full-time work. I was working in finance as a currency trader.
I used to work in economic development, local municipality, hour drive there, hour drive back for both of us. Like we get it, guys. Like, that's exactly how we started. And we had our quote unquote side empire growing at that time.
In our first year, our goal was actually to add one new property per month to our portfolio. And because we set it as a goal, that's actually exactly what ended up happening. So essentially, we started with arbitrage, very, very lean in the beginning. So we were hustling, driving all over town, picking up used furnishings. So
renting a U-Haul, we were literally the ones moving.
Total grassroots, ground up, campaign. Yeah, love it.
For us, we got up to 5 units initially using that strategy with rental arbitrage, but then we kind of got into a snag because even though, yes, arbitrage is significantly cheaper than obviously having to buy a property and, outlay the cash for the asset and also the furnishings, there's still some capital intensiveness to it if you're using your own resources. And that's, we started having this conversation one day. We're like, well, if we want to grow faster, if we're going to have to keep waiting in order to have a big enough pool of money to then go recycle it and then go do another deal, it's just going to take too long. I'm an impatient person by nature, so it felt too slow for us. So we're sitting around one day, we're like, well, we want to grow faster, but if we have to do this, it's going to take forever. So then I had this crazy idea and I was like, well, wait a minute. What if we actually didn't have to do the stuff that we're currently doing right now? What if we didn't have to sign a lease, have a deposit, or even pay for furnishings? What would that look like? And then, because we started asking the question, we started getting different answers. And we're like, well, if we didn't have to put our own money into the deals anymore, well, then we could grow exponentially because we wouldn't have to use our own resources.
Essentially there, guys. So Michael's talking about the partnership model. This is how this came to be within our own business and really how we started scaling that way. Because, if we're not having to pay, a lease, not having to pay for furnishings or expenses or anything like that, like we would in the rental arbitrage model, it's essentially how many pieces of paper can you sign until you hit your goal? Because essentially, if you're just splitting on revenue, there is no downside financially. There is reputational risk, of course. I'm going to have that. There is always downsides in every deal. You have to perform on the property, else they're not going to keep you around, right? Sure. But at that point, the scalability was huge.
Yeah, because we didn't have to use our own money by partnering with the owner and having them pay for the furnishings. That's really the quote unquote secret, I guess you could say, is how we went from literally 5 units to today having this conversation, 45 units that we're currently managing and launching probably another I don't know.
I think we're at a 15 to 20 by the end of this year, potentially even more.
Yeah.
So it's just like those are in the pipeline, like solid deals coming through.
Yeah. No, I mean, that is the secret sauce. And that's what's so innovative about what you guys approach is and what you guys teach to, folks that go through your coaching process. And guys, if you're already interested, you've got questions for Michael and Katrina and their team, go ahead and reach out. Go ahead and email BNB Bootcamp at VIPfinancialeducation.com. Include your first, your last name, the best number to reach you at. And I understand you guys are handling these calls personally, and you guys have a limited membership per month on that. We'll talk about that later here in the video. But you guys are showing folks to exactly get where you guys are right now. You started off with one property, you're up to 45 right now, looking to be at close to 60 here by the end of the year. And just a handful of years, guys. How long have you been doing this? If you don't mind sharing with the audience that maybe hasn't seen you on here before. And guys, we'll drop the playlist, so go ahead and check out all the previous videos with these folks.
Yeah. So at this point, like at the time we're having this discussion, September 1st, 2022, we're just coming up on the 4-year mark as of October. So that's only within the last really 4 years that we've been able to, do what we've kind of done.
And the scalability point of it, like our first year, I believe we generated about 285,000 the first year that we started. Second year, I believe we went to 2.5, and now coming into the fourth year of doing this, we're about to cross over 5.5 million.
5.5 million in annual revenues.
Correct. In annual revenues of how we've scaled. And I just want to show the scalability side of it, because a lot of people are saying, can I really do this? Can I really, scale this as a true business? To have that short of a time frame, we have students creating 6-figure businesses in under 6 months. Like that's the whole reason they're coming to our coaching, because it's taken us 4 years. It's taking a lot of our students even 6 months to a year to create these businesses from scratch, because they have obviously the shortcuts, they know the pitfalls, the systems, the process behind it, so they're able to go quicker.
Yeah, you guys have developed the roadmap. You've developed the blueprint, guys. We've had testimonial after testimonial of folks that have gone through their program and, are getting that 6-figure income really quickly out of the gate. We'll go ahead and drop those links below. So let's talk again. Let's kind of go back to that scalability. So when you guys did, and that was kind of that light bulb moment for you, Michael, it sounds like, when you guys did kind of come up with that partnership model, what's your approach then at that point? How did y'all pivot, and how do you talk to folks in that arbitrage model versus that partnership model? What's your approach differently to those homeowners?
Yeah, it's a great question. So the answer to it is, it really doesn't have anything to do with someone having like a preset agenda coming into a meeting with the homeowner. What actually happens is you want to get really clear on what is a homeowner or a property owner's goals with their investment property. And you want to have that drive the conversation, because that's how you make it about the other person. And then you're just simply finding the model that works best to help them achieve their objectives.
Yeah. And that's really true. Like when we say partnership models, it's not like we have a partnership model and it goes towards it, right? Like there's multiple ways to skin the cat, and just really looking at this, it's having that open conversation where it's a win-win-win for really everyone coming through. It's a win for the homeowner. It's a win for the guests staying at your property, and it's a win for us, obviously, too. So when you kind of play in that field, right, and you're able just to find everyone's goals, that's when it can really work out well. And when we're trying to look at these deals, and before we even come into these conversations with a property owner or homeowner, we always try to run the numbers before, right? Actually, we do. We don't try. We do run the numbers before, because we have to make sure it's a viable deal, viable area, making sure, which one would actually work out better, right? Like, is the arbitrage process the best? Is the partnership? Like, let the numbers speak for itself. We don't try to pigeonhole anyone into one type of property or type of deal.
Yeah. So when you understand what their goals are, so for example, if you're talking to someone that's like, I need a steady income, I can't make less than X number of dollars per month. Well, the partnership conversation is totally off the table, because that may not be appropriate for that person. Mm-hmm. So then you would have a discussion like, well, I can rent your property as if I was a long-term tenant. And then obviously, we go through all the different benefits of what that can do for that person. With partnerships, though, the way we structure that and show the value of it is we say, hey, look, if we work together, we can help you turn your property into a profitable short-term rental. So you could actually make more money on your investment property than you could by renting it long-term. But the best part of all is that you actually don't even have to do any of the work. because that's where we come into the picture, and we'll actually take all of that off your shoulders. So not only can you earn more, this entire arrangement can be completely passive for you. So really it just comes down to understanding like what is their goals, what is their motivation, and then just simply finding the deal structure that's going to suit best to fit their objectives.
Yeah, no, I love that kind of, it's not a one size fits all approach to it. You guys are going in kind of eyes wide open. You've got, multiple options that you can take the deal down with. How are you analyzing the property before you even reach out to them? I mean, what's that analysis look like? Are you guys looking at just, specific property types, specific areas? What's kind of guiding that research?
Yeah, it's a good question. And I keep saying it's not a one size fits all as well when you're kind of analyzing deals, and it's super dependent, but we do have a structure that we take our students through. Definitely there's software that we can, and tools that we have our students go through. A few of them, obviously there's AirDNA, there's all the rooms. I'm sure you've heard of that one. And so that's kind of previous data. It looks at the history of what's the average in that area for that kind of size of house, elements like that. And then there's going to be future data. Look on the short-term rental platforms themselves. There's Airbnb, VRBO, Booking.com. Like, take a look and see what your comparables are actually charging and potentially getting in that area as well. So that's forward-looking too.
So that's part of it, of course. But the first thing, you always want to make sure whatever market you're looking to get into, you want to make sure that it is friendly to short-term rentals as well. Now, there's obviously going to be varying degrees of that, of course, which, in our training, we go through all the different kinds of examples and situations that someone might run into when they're trying to navigate that process, right? But, the other really important thing is you want to really make sure that whatever market you're looking to get into, it inside and out, because in order for you to identify where there's value, you have to understand what are properties renting for in that market in the long-term market, in the short-term rental market, how much profit potential is there between those two numbers. And then most importantly, is there an opportunity for landlords to earn a greater return if they were to partner with you rather than just renting their home as a long-term rental?
And this is especially important if you're looking to purchase in any kind of area, because you got to look at zoning, you got to look at regulations. Is it a primary residence? You have to look at all those factors, especially before you buy. So what I love about what we do with rental arbitrage partnerships, we can test out a market to see its viability before we even purchase into that market. So it's kind of that tester, and it's easier to get out of a lease or agreement rather than a mortgage for a place. So if you ever want to look into an area as well, like, you need to do this upfront research before you get into any of those deals, but especially before you buy.
People are traveling differently. People are working differently now. So the trajectory of short-term rentals is only going up right now. So it's drawing more attention. Guys, if you want to get involved in it, these are your folks. If you don't have a ton of capital, if you don't want to utilize your credit in order to get into these properties, but you want to make money in the short-term rental space, go ahead and reach out to Michael and Katrina and their team at BNB Bootcamp at VIPfinancialeducation.com. Include your first, your last name, and the best number to reach you at, and they'll talk to you about their program. There is a cost associated with that. If you guys can kind of break down the offering, and I know you guys are always gracious enough to give a special deal to our folks that are watching, on the channel here. So if you can kind of break that down, what do they get? What are the costs associated with that?
Yeah. So when anyone's kind of considering coming in, we always want to be transparent up front of, what it looks like to actually work with us, the cost coming in. So we offer a 4-month BNB Bootcamp Kickstarter program. So that's everything we talked about on this call so far, is like how to get in, how to get those business foundations, differences between rental arbitrage, partnership, all the systems, the back end, the pricing, like literally starting kind of, I guess, that business in a box that you were saying, from scratch to really be effective and hit the ground running, but make sure you have a very good business to be able to grow and scale with. So that 4-month program of anyone coming in, our program starts at $12K US. However, with VIP and the relationship we have, any students that are coming in from that route, we do offer the VIP discount, which is $9,997. So just shy of 10K. That's, on the call, you're ready to get going. You're sick of being on the sidelines, ready to hit the ground running. We do offer that for any students coming in through VIP.
And I understand you guys have some financing options also. If people won't necessarily have the 10K, call it up front, there's some installment programs, and you guys have some financing options as well. They can talk to you guys about that on that phone call. So guys, if someone's watching this episode and they are kind of debating on whether or not to move forward, what would you say to them?
I think they just need to kind of analyze their life right now. It's like, kind of just sitting in inaction, not like, what's the cost of inaction? Like, are you okay with your life the way it is right now? If you're in a W-2, or you have the power to change it, right? Starting something new, having the blueprint of doing it, and trying something different. The way you want a different life is by doing something different. So we're a good fit for someone that's ready to go, taking the action and wants a different life for themselves and their family. And we potentially generational wealth of when you're really looking into it. So anyone kind of sitting on the sidelines, that's what I would kind of refer to them. Just look in the mirror, have the discussion, and let know if it's a good fit for what you're actually looking for.
And there's no discrimination here. I mean, we literally have people that I have a 19-year-old kid going through my program right now that has, he just got started. He barely had 2 nickels to rub together. Now he's got 3 properties, and he's sending me, DMs wondering if he should drop out of university.
Oh, wow.
And we have people that are
in their 60s,
and they're just trying to make a few extra $1,000s a month to supplement what they're making on a pension income. So really, at the end of the day, everything in between that, what it really boils down to is, as Katrina correctly mentioned, is where are you at? Where are you going? Are you happy with the direction that you're heading? And if not, then maybe it's time to start looking at something that's different, getting into a different vehicle that can take you to a different destination. I mean, for ourselves personally, I mean, we started this business with, next to nothing. And here we are 4 years later, and, been able to transform that into, a
multi-million-dollar business with multiple properties under us that we own. And, and we're helping others do the same thing.
Yeah, no, y'all are a true success story. So Katrina, you said something there. You said about being a good fit. Who wouldn't be a good fit, I guess, would be my question.
And I'm not afraid to even say that as well. Like, people that aren't a good fit, I would say, that kind of quick money, silver bullet solution that someone's, we sometimes get questions on calls of people coming in being like, what's the time factor? Like, I don't really want to work evenings and weekends. Like, I maybe have an hour per week. And it's like, this is starting a business. Like, I want to be transparent. Like, this is starting a business from scratch. However, we're going to do it the shortest amount of time possible, the most direct route, but it is going to come up as work. You will have to, because it's your responsibility to have your own business, but it's going to be your responsibility for your future and your own cash flow. So someone coming into this, it won't be a good fit if they're looking for, clicking a couple buttons, money coming out, right? We're going to show you the easiest and simplest and automated way possible to start this business, but it will be work.
Yeah, we always say to people, when opportunity comes knocking at your door, don't be surprised in the least if it's disguised in the form of work clothes.
Right, for sure. Well, that's like the the person that shows up for their interview and asks how many vacation days they get, right? So you immediately know probably not the right fit. So fantastic, guys, and it's probably not the right fit for most people, guys. This is an active strategy. You can make a lot of money doing it, and the proof's in the pudding. These guys have made a ton of money doing it. They're showing others exactly how to do what they've done over the last almost 5 years at this point. So guys, always a pleasure. Looking forward to having you back on. Until next time, take care.
Thanks you so much.
See you then.